Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir. Another week, another day, another episode in the world of Palantir. We've got three things to talk about on today's show. Number one, price action. We got some volatility to the downside for Palantir. First volatility to the downside we've had basically in 3 weeks. So we're going to talk about that, how I'm psychologically thinking of it, and then the risk reward in terms of the price action and kind of the range of prices I think the Palantir stock can move in over the next couple of months. Number two, we got a new deal. We didn't cover it on Friday, but we got a new deal with Sampo, one of the first early investors in Palantir. So we're going to talk about that. And then number three, Palantir put out a new article about civil liberties and privacy. And I think this article, we're just going to read a little bit of it to kind of go in depth on the idea that Palantir is not an evil company trying to steal your data, but rather Palantir is a company that protects people's data. We got a lot to get into. Daily Palantir. Let's get into it. Okay, so let's start off the day with the most obvious subject that we have to start off with because we haven't really had to talk about this in basically 3 weeks, which is that we are experiencing some volatility to the downside on Palantir, down about 3% on the day, down a little bit after hours as well. So you could call it basically, about 3.3%. Why are we experiencing this downside and what do I make of it? So first, why are we experiencing it? NVIDIA earnings is on Wednesday. That earnings is going to be one of the most important earnings. I think it's going to determine a lot of the trajectory for the broader stock market, for the S&P 500, for Palantir, a lot of AI names, which Palantir is obviously grouped into. So that earnings, NVIDIA was down a little bit. It's up about 40% over the past couple of weeks, down about 2.25% on the day. That's going to have a massive impact. So I think the market is a bit scared going into NVIDIA earnings on Wednesday because we just don't know what to expect. So that's the first reason I think the stock is down. Number two, and more importantly, the reason why I think the stock is down is because if you look at the year-to-date return on Palantir stock, which is important to do on a day like this, we are looking at a company that is up 86% year-to-date after the fall. It was up about 94% at the top when it was at, I think 32.75 last week. So I think when we look at the decline on Palantir today, down 3%, and we experienced the first level of volatility that we've had since August 5th. Remember, August 5th, the stock tanked to $20.69. We have not seen $20 since May, after it tanked about 25% after their Q1 earnings. Then it gapped up all the way to around 27, stayed there for a while, thought 27 would be the new base. Then August 5th happened, collapsed all the way back to 20. Within the day, Palantir went up to $27 because earnings was on the same day as August 5th with the whole Japanese carry-in trade crash. And Palantir recovered pretty easily, then breaking $30 that same week and then staying above 30 for the past 2 weeks, which has been pretty incredible. So we have closed above $30 about 10 times now, and we haven't done that since 2021. So it's been more than 3 years since we finally got to that $30 range. All of this to say, I think the volatility to the downside is because people are taking some profits. And people taking some profits I don't think is the worst thing in the world for Palantir because people are up a lot of money. There are probably tons of fund managers that went to Europe over the past couple of weeks that are just returning to do their jobs. They probably didn't really look at their portfolios too much. Now they have to do some portfolio rebalancing as we get into the end of the year. They're looking at Palantir. They maybe bought it at $20, $21, $22, even $25. They're looking at the stock at $30. They're looking at the sort of core metrics, price to sales, PE ratios, etc. I don't think those are the perfect ways to evaluate Palantir, but those are metrics that people use. And based on those metrics, you could argue that the stock doesn't have to be overvalued, but the stock could be a bit expensive. My friend Amir, I'm going to link his article in the chat. He wrote a really good article on this, put in the description on Seeking Alpha. And he kind of walked through why the growth potential of Palantir is very exciting and obviously worth paying a premium for. Alex Karp, Western Values. I mean, there's so many different things you could justify the premium for on the stock price. But on a fundamental basis, the market is pricing in a lot of growth. Therefore, it is one of the most expensive names in software. In fact, CrowdStrike used to be the most expensive name in software. Now Palantir is the most expensive name in software. But again, going into Q3, if they can give us 30% top line growth, right now they're at 27%, along with adjusted operating margins getting closer to 40%. Right now they're at 37%. You're going to have a company that is just performing on all metrics and re-accelerating growth. Having said that, I think the range for Palantir is 25 to 35. And this is not new. I said this a couple weeks ago as Palantir was beginning to run. And 35 has been my price target end of year after those earnings. I was like, okay, re-accelerating. We're relatively in a good shape in the macro. Therefore, I think $35 is not going to be crazy to get. I also think $25 is not crazy to get because Palantir was $16 in the beginning of the year. If we were to tank to 25, I don't know what the catalyst would be to tank to 25 outside of a bad earnings. I think we're going to have a good earnings. So the only way I think we get to 25 is a bad macro, which I'll talk about in a second. That could happen. But if that does happen, stock would still be up 50% year to date, even if it falls to $25 from 30. So I think we have to put that into context. I don't think we should be as spoiled as we would like to be, or as greedy as we would like to be, because at the end of the day, it's very hard for a stock to go up. It's very hard for investors to put their hard-earned money in a company and see their capital appreciate. Palantir up 86% year to date. If you are overweight Palantir and you bought, from 16 to even 24, you are sitting on a pretty decent return. If we retest those levels, and I don't think we would go sub 20, I think that time is probably not going to happen unless we get a massive recession. But if we retest 25 and we're up 50%, only a measly 50% year to date, I think simply that's a massive buy the dip opportunity, as long as that's like a macro driven event and it's not really anything wrong with the fundamental thesis. And even if the company has great earnings and it tanks 25, I think that's an even better buy the dip opportunity. So to me, if we go back down to 25, I'm not scared of that. I would much rather buy my shares at $25 than have it to buy them at $35, right? Especially because I have a long-term trajectory on this company. This is one of the only stocks I'm really long, and so I can wait it out. But I wouldn't complain about that. Now, for the people that bought at 32 or 28 and they thought this thing was going to $40, $50 soon, I don't know what to say to you guys, because at least on this channel, I have been very explicit about the fact that I don't want to get overly excited about the stock price. I am more excited about the company. I'm overly excited about the company. I'm not overly excited about the stock price. And to me, the stock price has always been a byproduct of the of the ability for the company to execute. So if you bought it at 32 hoping it would go to $40 assumes close to a $90 billion market cap. Like that's a bit much for a company that's still in the infancy of its growth stages during a time where there are still major questions around the macro, unemployment, jobs, the election, all of that stuff, inflation, etc. So I think if you bought it to get it at to see it go up to 40 and 50, that's you've got to realize that's like a little unrealistic. Could it happen? Sure. But it's also hard to imagine it just zooms all the way to $40, $50 this year without a ton of earnings growth catalyst. Now, we could have a melt off, a blow off the top, melt up rally, and things get absolutely crazy. That is very possible. But on my sort of base case, Palantir up 94% year to date, I am very happy with that. And if we were to fall 10 or 20% from here and only be up 70% year to date, I am also very happy with that. To me, that just gives me another opportunity to buy the dip. So it feels kind of crazy even saying like, well, we've got to talk about this massive 3% down day we've had, because we really haven't had down days on Palantir in the past 3 weeks. But today's a down day, down 3%. And I think if you did buy at the top and you're getting a little nervous, you have to have a long-term trajectory here with DCing. I made a very long video. It was a 30-minute video when Palantir hit $28 talking about this exact concept. So I'm not going to reiterate everything I said in that video, but the core thesis of that video was, hey, this is a company that I am long on. This is a company I barely do any options on because I just want to own stock. I just want to increase my ownership in the shares. And as a result, I take dips as major buying opportunities. And when it runs up, I just sit back and let it chill out. And I don't think you have to have some type of, naive excitement to like get in. It's like, dude, it's a stock. It goes up and it goes down. And when it goes up, you relax. And when it goes down, you take advantage of the dips. So that's my price range, 25 to 35. If we end at 25 at the end of the year, I'll be very happy. We are up 50%. If we end at 35, I'll be really happy. We're up basically more than 100%. But the volatility coming today, to me, is explained by people wanting to take profits on a stock that they're probably up a lot of money on. The insiders sold about 5 million shares. We talked about that last week. As well, Shyam Sankar, Alex Karp, David Glazer, Ryan Taylor, all of the C-suites were selling shares. And they should. The stock's up 90% year to date. You would imagine they'd take some profits. They've dedicated their lives to the company. You can't really blame them for taking profits. The question simply becomes, does the market have enough liquidity to deal with all that selling? And quite frankly, it does. The stock did not move after insiders sold 5 million shares, which is kind of crazy to me, right? The stock stayed at $32 and the insiders were able to sell at 32 without seeing any real downside momentum. So from that perspective, I think there's a ton of liquidity around Palantir. A lot of people want to buy Palantir. A lot of hedge funds want to own Palantir. We have S&P 500 inclusion potentially coming up September 6th. If that happens, I think we have a massive surge. If that doesn't happen, I don't think that really matters. Then we'll just get ready to qualify in 2025. But at the end of the day, I don't really see us ending the year any lower than 25, barring an economic recession and a bad macro. $25 would be my base case. If we have a good macro, rate cuts, company performs in Q3, 30% top line growth, I think 35 potentially 40 if things get really crazy, but 35 end of year is my price target. So let me know in the chat if anyone's struggling with this down 3% day, because I don't think anyone who's been in Palantir for a while should be struggling on a down 3% day. If it declines further, those are dip opportunities, and you get to increase your ownership of a company that was up 90% year to date and now is up 65% year to date. It's not that serious to me. And if you were buying at the top, you've got to understand that, hey, if that's a short-term top, then you've got to be long this company, because this is how the company, to me, is going to play out. There's going to be a lot of ups and downs. It might go up 100% one year, come down 30% the next year, go up 20% inside of that year, then go down. Like, all of this stuff is part of owning a high-growth tech company that is really getting a lot of love from the street and a lot of analysts, but is also in the infancies of its growth. And so there's going to be volatility there. The question is just, how do you want to position yourself? And for me, the best way to position is to go long and have a price range that I think is appropriate enough to expect for Palantir, which to me is $25 to $35. So down 3% on the day, volatility to the downside for the first time since August 5th. I'm just unemotional about it, given the stock has performed very well this year. And until we get below 25, if that even happens again, I personally don't see a lot of pain as a Palantir investor. To me, that's just okay, so we had a nice run all the way up to 32, came back down to 25. We'll obviously test that again because we've held it for 2 weeks at this point. We've had enough momentum there. And if we were to fall that deeply, I think there would be something more macro driven, which means every stock would struggle, not just Palantir. So those are my thoughts on price action. Let me know what you thought in the chat or in the comments today based on it going down 3%. But to me, just didn't feel like that big of a decline on Palantir. Okay, so let's get into our next story on Palantir, which is the deal that we got on Friday. So Sampo, which is one of our earliest investors in Palantir, decided to have a 3-year initiative with a data integration and AI solution to drive transformation at the insurer, which is among the top 5 in the corporate and agriculture business insurance segment in Brazil. So Sampo Holdings is the parent company in Japan, and they have subsidiaries across the world. This deal in particular is around the insurance segment in Brazil. Sampo Holdings, again, is one of the largest insurance companies in the world. So reading a little bit from this, the contract builds on Palantir's existing partnership with Sampo's parent company, Sampo Holdings in Japan. It has paved the way for data operations platforms, Foundry and AIP, to be used to support improved decision-making in key areas of Sampo's business, such as pricing, underwriting, and risk management, delivering efficiency gains and faster response times for the insurer's customers and partners. That sentence right there is basically the use cases that they're getting out of Foundry and AIP and why they're seeing value from it. So the actual deal itself, marine insurance, where Sampo has led the Brazilian market since 2017, is the first segment where the software is already embedded as a solution in pricing processes. This involves smart models which can interpret a significant number of physical documents and propose more appropriate values based on an assessment of historical pricing context and potential risk factors, sort of hypothetical simulations based on aggregating a ton of data to then figure out how is the best way for us to underwrite in insurance. And if you're in the insurance business, underwriting is pretty much the name of the game when it comes to having an effective process. Sampo's chief strategy officer said, historically, the search for efficiency involved automating simple, repetitive, and high-volume processes. This still applies, but with the new technological frontier applied to the use of data and AI and the availability of simpler tools with natural language, we can expand the search for efficiency to the organization's highly specialized core processes. The challenge now is to ensure that the team is involved and prepared for this new moment. Really interesting quote right there. Not only did he say, hey, we see the value here, but that last sentence, the challenge now is to ensure that the team is involved and prepared for this new moment, basically saying, hey, the challenge is not implementing the software. The challenge is making sure our employees are ready to engage with the software in a way that's user-oriented so that they actually like using the platform in the first place. VP of Latin America at Palantir said this important agreement with Sampo is Palantir's first partnership in the Brazilian insurance sector and reflects our consistent investment and growing local presence in the country. Our AI operating system now powers many of Brazil's most important organizations, from government public health and education agencies to companies in the retail and tourism sector. Nothing much to say about this deal other than the fact that it's another international commercial partnership. It is building on the partnership we already had with Sampo Holdings in a different segment of their geographical presence, which in this case is Latin America. And what they said at the end, and the VP of Latin America says, now our AI operating system is powering many of Brazil's most important organizations. I'm doing a little bit more due diligence into seeing what Palantir's role is in not only Brazil, but Latin America. The only other high-profile Brazilian deal I know with Palantir is Rio Tinto. And that was a deal that happened back in 2021 where they increased the efficiency of Rio Tinto by 150%. But besides that, I'm not that well versed on what Palantir is doing in Brazil, and that's because I don't think the information has necessarily been that public, but it's something I want to dive into. So this deal is good. Another 3-year partnership, working with our existing partners, so net dollar retention should go up in a different location, which means that existing holding company, Sample Holdings, saw value in Palantir, not only for an investment purpose, which is why they invested in the company, but also they said, hey, what if we diversify and bring Foundry and AIP that has worked so well in Japan to our insurance business in Brazil? And Palantir said, yeah, let's do that. Let's sign a 3-year deal. And there you go. We have a new international customer in the commercial segment. So I think that's exciting. I think that's very important. I think that shows that Foundry and AIP is just becoming stickier and stickier. And at the end of the day, that just means more top-line revenue growth because we got another 3-year deal. All right, last thing I want to talk about today is Palantir's recent article on privacy and safety. Now, I'm not going to read the whole article. I'll put it in the chat, in the description. I keep saying chat because we live stream a lot on this channel. If you're part of the Market Open or Market Close, let me know in the comments. Appreciate everyone who watches those shows. And if you want to get more in depth around the macro, we have a Market Open, Market Close every single day. But in terms of the article, I'll leave it in the description. So this is what we've got. I want to read these 3 paragraphs from the article because I thought this was very important. So for first-time viewers of the channel that care about Palantir, or people that are just curious, why is Palantir not the evil spy company that a lot of the mainstream propaganda has set it out to be? These 3 paragraphs, I think, kind of explain why. So how does Palantir build privacy-first products? In the software industry, privacy legislation often struggles to keep pace with the rapidly emerging and evolving technologies. This inherent lag places the onus back on technologists, aka developers, to not only meet current legal standards like GDPR, but to anticipate future privacy protection needs in the next 5 or 10 years. At Palantir, we have long adopted this mentality. So whenever someone says, oh, Palantir's trying to steal your data, dude, they're thinking over the next decade how they can better protect your data based on regulatory frameworks that are more likely to be enacted. Initially, this involved developing robust data access controls, auditing functionalities, and mechanisms for data minimization and anonymization well before the GDPR mandated these capabilities in the EU. I think a lot of people did not know Palantir was on the cutting edge of data privacy and civil liberties before the EU made it the law of the land. Today, our focus includes building solutions for novel and evolving privacy and risk considerations, such as those presented by the proliferation of AI, including large language models across industries, LLMs obviously making the entire element of privacy a lot more complicated and bringing up a lot more risks as well. Currently, our products bring privacy-enhancing technology to customers across industries. These applications enable organizations to readily deploy the high standards of privacy controls within their operations, including scanning for sensitive data, robust encryption and obfuscation, retention and deletion, detailing audited logs for transparency, and controls and data access and checkpoints on sensitive interactions. These features are foundational within our products, integrating privacy protective technology with the value of data integration, analysis, and AI on a single platform. Our commitment to privacy is also evidenced by our patent portfolio, which is, I think, a really good point, which signifies a recognized body of novel privacy-enhancing technology achievements. So I think those 3 paragraphs, and again, I think this is a really good article. You can check it out in the description. But those 3 paragraphs in and of itself says, hey, we've anticipated what would happen with regulatory frameworks around civil liberties and privacy controls around data well before they became the law. 2, we have tons of examples based on all the things I just read on different mechanisms that are foundational to the technology that actually make sure they can protect the data and keep it private, secure, confidential, classified, etc. By the way, Palantir, the reason they have IL level 6 clearance with the DoD is because they actually know how to do privacy and protection when it comes to data. And then finally, they're like, hey, if you really don't believe us, look at our patents. And I've actually looked through Palantir's patents. If you just Google Palantir patents, you'll find the website and you can go through all the patents. I think there's like a couple hundred, if not a couple thousand of them. There's a lot of patents. And if you just Command F privacy or data protection or any of these terms, you're going to find a lot of patents that have to do with building the foundational infrastructure of their tech in a way that maintains civil liberties and privacy protections. So I think from that level, this is a good article to send to anyone that you have in your life that tells you Palantir is the evil company, you're investing in an evil spy tech software. It's like, no, dude, you're just like not educated on the subject. All right, that's it for me. Thank you everybody for listening and watching another episode of Daily Palantir. Email me at amit@dailypalantir.com if you have any questions around Palantir or any thoughts or concerns you want to bring up. And dailypalantir.substack.com, my free email newsletter. You can check it out every single day. We send out a newsletter around about 10 p.m. every day for people to check out and hopefully get to read what you are hearing in this video. Thank you, everybody. I appreciate it. Let me know your thoughts and comments on the volatility we saw today on Palantir, and I'll see you guys in the next one.